So good afternoon, everyone. Welcome to this session of Go Small, Go Big. And we are honored to have the management of Batliboi. Let me quickly introduce the people on the dais. We have Mr. Nirmal Bhogilal, who is the chairman of the company. And he has been with the company for 51 years. Sir, congratulations. I just noticed that you joined in September 1973. So
Actually, I started work in 1970, end of 1970.
okay. So,
Okay.
yeah, so that's been a long period. So Mr. Bhogilal is also a chairman of various committees of CII and also has been chairman and past president of Indo-German Chamber of Commerce. We have Mr. Sanjeev Joshi, who is the managing director. He has worked with Batliboi in all his verticals, and he joined as a trainee in 1984. So it's been quite an incredible journey for Mr. Sanjeev Joshi also.
83 people in this Zoom call.
We also have Mr. Kabir Bhogila, who is the whole-time director, and he's there with the company from 2007. So he's in the third generation now working for the company. We also have the company secretary, Pooja on the line. So thank you everyone for joining in. Sir, before we start, we would definitely like to hear a little bit about the long history of Batliboi, how it started, and how has it evolved. If you can just take us through, how the journey has been for the last 100 years.
Thank you, Rakesh. I think before I start, let me just thank all of you for being here this afternoon. In fact, it's an honor for me that you are here rather than the other way around. And I'm very appreciative that we have such a large audience who are interested in the company. To give you a little history of Batliboi, Batliboi had, in its different forms, as a proprietorship firm, partnership firm, and a limited company, private limited, then public limited, has been in existence for more than 100 years. So I am now the third generation, and with my son in the company now, for some years, he's the fourth generation. So we've been 4 generations of the promoters who have been involved in the company's operations. We are primarily an engineering company in the capital goods industry, and we basically cover the machine tool industry, the textile industry, both in textile machinery and its other aspects. And with this acquisition that we will, the merger that will take place with our group company, will also be in the environmental engineering business. So these are the main 3 verticals of Batliboi. In the machine tool side, we manufacture machine tools in India.
Can everybody please be on mute? Thank you.
Okay, so our machine tool manufacturing comprises of what we manufacture here in India, in Surat. We also have a 100% subsidiary in Canada, which also manufactures machine tools, which primarily caters to market. We also have trading activities in machine tools where we are agents for very reputed global companies in heavy both metal forming and metal cutting machine tools. In the textile engineering business, we manufacture textile air engineering equipment, which basically supplies climate control, both humidity and temperature and waste control to the textile industry, comprising of spinning, weaving, and knitting. This business is also now expanded in the non-textile side into synthetics, as well as in the area of glass fiber, tobacco, On the other side of textile group, we also have textile machinery, where we are primarily agents for global textile machinery manufacturers in the area of spinning, knitting, weaving, processing, printing, as well as in the area of the effluent treatment required for the textile industry. On the Batliboi environmental engineering side, we are basically in the air pollution control side. So we supply air pollution control equipment comprising of bag filters, electrostatic precipitators, scrubbers, centrifugal fans to a whole host of industries, whether it's steel, cement, petrochemical, chemical, oil and gas, and tire industry. So this is basically the outline of the of our business. We are this promoters control 74% of the equity, and post the dilution before the merger, it went down to about 60-odd%, and post the merger, it will go back to 72, 73%. As far as the merger is concerned, the SEBI has approved the merger, and now it will go before NCLT through its due process for approval, and we hope that we get the approval latest by the fourth quarter of this year. So I think that in a nutshell is our business, and we employ about 350 people, both here in India and another 40-50 people we employ in Canada.
So thank you so much, sir, for a quick update on what the company has gone through and what is the future plans. So coming forward to next 2 to 3 years, what are the strategic priorities? You have mentioned about the merger with GEL. There's some capex also planned, some restructuring, some sell-off of non-core assets. So can you take us through what is the plan for next 2 to 3 years in terms of strategy?
And in the current year, we are putting in about 20 crores of capital expenditure. I think most of the ordering is already over. And so we should expect that all the equipment that we are purchasing will be commissioned by the end of the fourth quarter. So the real effect of that will be in the next year and the year after next. Basically, the purpose of the capital expenditure is to double our turnover in what we manufacture in Surat in terms of machine tools. So that will give a sizable increase to the volume of business that the company will be handling. We are also spending some money. We've already spent, and we will also spend some money on the capex for our air engineering side, which will not only improve productivity but will improve quality finish as we are entering the global market for this business in the textile industry. As far as the merger is concerned, well, once the merger is approved through NCLT, it should sizably improve our both top line as well as our bottom line. As you're aware, the environmental engineering business is in a growth phase, especially with the kind of spending that is going on in our country on infrastructure and on minerals and metals. So since we cater primarily to that industry, we expect very good growth in the years to come in this business. And as you're aware, the capital goods business, I think as long as our GDP continues to grow at 6% plus, I think capital goods industry will have a pretty decent growth rate. As we have raised funds, we raised about 60 crores of funding. 20 crores has gone more or less to repay all our debt. So we today have very little debt on our books, a little bit of cash credit. That's about it. and another 20 crores is going into capital expenditure, which I've just explained. And another 20 crores we have kept for some kind of acquisition. I'm sure that as time goes by, there will be opportunities for acquisition in our related areas. And since the promoters will be having more than 70% holding in the company, I think we can also use part of the equity for acquisition purposes. So I think we are in a very interesting phase in the development of the company, and we expect a pretty decent growth for the future.
Got it, sir. So just let me just summarize it for the benefit of the audience. That one, we are doubling our capacity in the machine tool division here to capex of 20 crore, which will help our top line also double for that business. Plus, we are upgrading our foundries, so there would be some efficiencies gains out there. Third, merger would be very beneficial. It will help both top line and margin expansion. And fourth, you mentioned that there's room for inorganic growth also. So there's multiple tailwinds to growth. So thank you for that, sir. One of the questions I wanted to ask was about the acquisition we did in Canada of Quick Mill. How is that panning out, and what is the outlook for that business?
When we did this acquisition, I think what, 10 years ago? 2009. We did this acquisition 2009. And so far, the acquisition has proved pretty successful. Of course, we had some lean period some years back, but we are totally now on a very growth phase. As you can see from our first quarter results, as well as from our last year results, that Quick Mill, which is the Canadian company, has contributed very much to our both top line and bottom line. And we expect in future also, with the US economy continuing on its growth path, that this business will grow. And there also, we are looking at some kind of expansion and capital expenditure, which hopefully we'll get all the permissions before the end of the year. We need some government permissions for construction and increasing our sheds, etc., over their manufacturing facilities. So we are awaiting that approval. Once that comes through, we should be able to go through with it. And you must realize that Quick Mill today is a debt-free company. It has cash in the bank. And in Canada, there are some very, very good government schemes for helping companies to expand. So I think a combination of government support as well as our own internal resources, we should be able to carry out this expansion.
Okay.
And now Quick Mill has also entered the Saudi Arabian and the Middle Eastern market because their oil and gas industry, etc., is going through a huge expansion. And we are in the right kind of business to develop, to be there.
Okay. So let me take some few questions which are coming on the chat board. So Aman is asking, what is the breakup between, trading and manufacturing revenue as of now?
You see, one thing we must realize that when we talk about trading revenue, we talk about in our books only what accrues is the commission income. And our commission income on trading business can vary anything between 2% to 5%. So it's not like our own manufactured products where we've got a value addition of 30 and 40%. So if you look at our revenue from the trading business, it would be about 10% of our total what we call local revenue.
Mm-hmm.
Of course, the volume of business would be much more, but the net effect is that it contributes to about 10% of the total revenue.
Yeah.
Okay. So to that sense, our top line is a little bit understated. because we are just capturing the commission for all the trading
Yeah,
business.
but if you capture the top line, then you'll say, why the hell is your EBITDA so
Margin.
low?
That is true.
Okay.
So the next question we have from Udit, he's asking, what exactly we do in environmental engineering.
I
Probably
think let me ask Sanjeev. Sanjeev Joshi was in a better position to answer this question.
Good afternoon, all of you. Nice that we are on board here this evening. It's my pleasure to answer all your questions out here. So coming back to your question of Batliboi Environmental Engineering Company, which is now being merged with Batliboi, this is primarily into air pollution business, catering to the steel, power, cement sector. We have now ventured into oil and gas. We also have done a lot of jobs in tire. So basically, this is an area where I think the next phase of growth is going to come for Batliboi as a whole, because the kind of infrastructure that has been put into oil and gas, into business like carbon black, paints, everything, everybody's growing. And I think the private capex is now turning positive in terms of the paralysis of decision making in first quarter of this year. Things are now moving in the right directions. The number of potential prospects that we are having on hand are quite high. So I believe that going forward, this air pollution control business, if everything goes well and we have this capex plan, and when we merge, the turnover of this company can double in next 2 to 3 years of time. We have last year done about 145 crores, and this year we are planning to do about 160 to 170 crores with a better bottom line. And this is basically into air pollution business. We are not into water or effluent treatment. We are purely into air pollution business. And we have centrifugal fans as another vertical there, which sells fans to big customers like Izek, Thermax, all boiler manufacturers. In fact, we have over 30 to 33% market share in boiler market for fans, and very niche fans. We are exporting fans to Southeast Asia and through OEMs and even to Gulf. So all those fan manufacturing is now being partly done outside, partly done inside. Will come back to Batliboi once the merger goes through. So overall, there will be a leveraging of the synergy that we have, leveraging of our customer base, and I'm sure that this thing will only compounded growth in terms of the merger that will go through.
Just to add to what Sanjeev mentioned, our customer profile comprises of all the blue chip companies of India, whether it is Adani Group, whether it is JSW, whether it is Reliance, Larsen & Toubro, some of the large cement companies, whether it is in the Birla Group or now of course the Adani Group, as well as companies in the oil and gas industry. For example, Mega Engineering also is a very big customer of ours. So, we encompass a whole spectrum of industries which require pollution control equipment, including even the tire industry.
So I think, thank you. I think, Dhruv, your question got answered pretty elaborately. Jinesh is asking us, question on this environment business only. He's saying, can you elaborate a little bit on the EBITDA margins that this business has?
Well, currently we operate on a gross margin of between 15 and 20%. And our bottom line today is about, PBT is about 5%. Okay, which will improve as volume goes up. And I think with the synergies between Batliboi and Batliboi Environmental, once these synergies work out, I think our margins could improve substantially.
Yeah.
Thank you, sir. Hitesh has a question that, what kind of CNC machines do we make? What is the average realization per machine? And what is the outlook for that segment? Plus, he has a question that, why our margins look a little bit lower than competition who's reporting like double-digit EBITDA margins?
Yeah, I just answered the first question, is that we are basically into three verticals of CNC machines. One is turning centers, primarily into turning centers. The second is vertical machining centers, and third is the vertical turnlets. So these are the three basic models that we manufacture in our factory. And right now, with the capex that is going on, what he has said is right, that okay, our margins are lower because of volumes are not coming up. So as we go ahead with the capex expansion that we are planning and doubling the turnover, I'm sure next year onwards, machine tool will be reporting much better figures than what it is now reporting today. And we are also on a expansion or a product development phase where we are adding a couple of products lines, also expansion of the existing lines, which I'm sure would add more, give more product basket to our customers. So all those things parallel are happening. We are upgrading our existing range to see that we are one step ahead of the competition in terms of redesigning some of our machines, adding new features to our machines. So all this is happening parallelly. I'm sure with this happening, the next 2-3 years, machine tool business that we have been looking at the past would be much, and the new one, the one which we are coming up with, will be much, better than what we have been doing in the past. So I'm sure with the upgrading of our foundry, the quality of the castings, the weights, everything, the state of the art machining center that we are putting in our factory will all add to the value to these machines, and I'm sure that our numbers will grow, and in our margins would definitely be much, better than what they are today.
What we are basically envisaging is with this capital expenditure to double the turnover with very, very marginal increase in fixed costs.
Correct.
And since the capital expenditure is all coming out of internal resources, there is no burden of interest to the company.
The next question is from Mr. Sanjay Shah. He's saying, how do we see the revenue and margin prospects for next few years? Any reason for starting point of margins, EBITDA margin being so low? So I think you try to answer on the low
What
margin.
we've explained, I think very conservatively, we can expect a growth of at least up to 15% revenue growth and much better bottom line. I think, and with what we've explained in terms of what is happening to the machine tool business, I think definitely these expectations will be met.
So a related question, can the machine tool do double-digit margin post capex?
Well, if you just calculate, do a little mental arithmetic, that if you can double the turnover with very marginal increase in fixed cost, you can see what it will done when your normal value-added margins are 30-35%. You can see what it will do to the bottom line.
No. And one more question, Ms. Sanjay Shah has. There are other group companies mentioned in the PPT. Are there any plans to integrate everything into one structure? I mean, we're doing BEL.
No such plans yet.
We know such plans. Okay.
There's no such plans. What we look for is more and more that something to do with our core business and the synergy that can happen with our business. So I think it'll be more interesting for the company to go out and look for inorganic growth through other means.
Shaurya is asking, what is the current order book and how much time does it take to complete, a typical order?
Without going into great detail, I'd say our order book is very, very healthy. Okay, and Sanjeev can mention about the kind of minimum order backlog that we expect from the business.
See, normally right now we have got a very healthy backlog of orders that can take us through end of quarter 3. But understand this, every vertical has different delivery times. So for machine tool is a product supply, so it can be anywhere from 2 months to 3 months, 5 months. When you go to textile engineering, which is more of a project supply, the delivery timeline can be anywhere from 2 months to 6 to 8 months. And when you talk about environment engineering business, which is a really large integrated business structure where you have large project orders being executed, the delivery time can be anywhere from 3 months to a year, depending on the size of the order that we have. So depending on how the customer moves. So it's typically for a project base, it is anything in a couple of months. It is a couple of months. Machine tool is hardly 2 to 3 months time.
And just to add, in Quickmill, the Canadian company, the order book is about 6 to 8 months, and that's about the time it takes to execute an order.
So a lot of people are asking about exact numbers for BEL. Meaning what kind of revenue and margin we have done in the last 1 to 2 years. You did mention about last year 150 odd crore revenue and 5% PAT margin. Is there anything more we need to add?
Not really, not really. But I think that's what the numbers are, and I think once the merger goes through, then we'll be reporting the consolidated figures every quarter.
Got it, sir. One of the questions people are asking: who are our competitors for this BL environment business?
Yeah, I'll answer that question. Basically, our biggest pan-India competitor is Thermax. Then there are a lot of local players, but our major pan competitor is Thermax in terms of air pollution business. And there's another company called Rico, which was out now, is back in business. But primarily for large orders, they're with reputed companies like Tata's and Ambani's and Reliance and Adani's. It is basically us and Thermax. So either Thermax gets it or we get it.
One of the question which is coming up is on our excess land that we own. We have said that we'll monetize at least 4 acres. There's still 32 acres, and so what are the plans? What development is possible?
Basically, we have roughly 45 acres of land in Surat, of which 4 acres have been earmarked for sale, which are really nothing to add to our existing facilities. It doesn't make sense for us to keep it. So we are looking for the right buyer at the right price, and we are not in a hurry to sell. As far as the other land is concerned, we still would have at least another 8 acres of land for development, which over time, I think we will look at what we can do with the land in terms of developing it. If for example, Surat becomes an IT hub, we can look at developing some part of those 8 acres for developing a IT center, etc., like a lot of other companies have done. So and there will still be enough land available for expansion of our facilities.
Sir, any idea on what would be the value of this 4-acre land? Yeah, what kind of value we expect?
40 crores.
40 crores?
Yeah.
Okay, sir. Thank you. Shika has a question. She's saying that LMW is talking about slowdown in textile machinery market. What is our view on the same?
Well, if LMW faces slowdown, then everybody else faces a slowdown also. There's definitely a slowdown in the textile machinery industry. Fortunately for us, we are not into ring spinning, and ring spinning is the part of the textile industry affected the maximum. We are more and more into value addition in the textile industry, so or giving machinery for value addition. So whether it is converting from spinning to knitting, from knitting to garmenting, from garmenting requires processing, etc., etc. So there is definitely a slowdown, but I hope this slowdown will be short-lived. Right. Because I think a lot of the slowdown has to do with what's happening between Russia and Ukraine, and the general slowdown in consumer spending, which was both evident in North America as well as in Europe.
The other question she's asking is, what is the rationale behind merging BEL now, not earlier or not later? How about the timing? What is really driving this merger?
Well, the point is that the BEL business requires a lot of non-fund based limits. As far as the non-fund based limits are concerned, you can only get these if you have a strong asset base. Now, BEL does not have really any fixed assets worth the name. Its talent is in design, engineering, and executing projects. So a merger with Batliboi makes sense because Batliboi has a huge asset base. So we could get all the bank guarantee facilities or LC facilities that BEAL requires without much margin money. Otherwise, the banks are asking for 40 and 50% margin money for giving bank guarantee facilities. So this was one reason. The second reason is we have a very, very good common customer base. I mean, all the customers of BEAL are also customers of Batliboi and vice versa. So we can leverage the good relations that one company has with customers for the benefit of the other company. And third is that BEAL also is in the business of centrifugal fans, as explained by Sanjeev.
That's what we started.
So part of these centrifugal fans today are manufactured in Batliboi facilities, and the rest are vended out to other manufacturers in and around in the Western region. So the idea would be, one is that with Batliboi supplying to BEAL, you always have this issue of related party transactions, etc. Second is that if the merger takes place, then Batliboi can expand the facilities so that more and more of the BEAL equipment of centrifugal fans is made in-house rather than vended out, which would also add to our turnover and bottom line.
And going further, we may also add back filters manufacturing for certain customers of oil and gas who insist that you should have your own manufacturing facility. So that also makes a lot of sense for us to expand into this and start our own manufacturing in another 1 year's time for oil and gas sector, where the precondition always being that you have to have your own facility to make this equipment. So that also gives us another opportunity for growth.
One last question Shika has is that she's asking, we are relatively an old company. Are we seeing anything materially different in our industry that, suddenly we're talking about growth? What has changed, she is asking.
Well, one is the environment in the country itself. I have never seen a more confident India in my career of 40, 50 years in industry. And I think if you look at the China factor as well, has added much more to the value of India for supply to the global world. So I think India is on a growth phase. India is in a very optimistic state. We have a government which is pro-business. So I think, at least in the eyes of most people, I think India, at least globally, people think India is on a roll.
Totally agree on that, sir. Akash has one interesting question. He is asking, what is the value proposition we bring on the table when we are competing against companies like Mac Power, Jyoti CNC, who have much larger capacities in order book at the moment?
Well, one is reputation, second is service.
And secondly, sir, the total machine tool market is huge and we are nowhere there. So for us to expand our market base is nothing, to double the turnover is nothing going to be it's going to be not that difficult. As far as performance is concerned, in some of the niche markets in like job of like die and mold industry, or there our machines are more robust, and any die and mold guy would prefer Batliboi machines, or any light engineering auto components would prefer our turning centers. So everybody has its own market share, its own market dynamics. No doubt we have been lagging behind in terms of expanding our market. So that's what we are now planning to do, that along with the production of the capacity being doubled, the onus is on us to see that we expand our market reach, expand our boundaries of geographical boundaries, and ensure that we also get, frankly speaking, today we are not much evident in the corporate sector. So going forward, our next step would be to enter the corporate sector. And I'm sure that with the capex that we are going in, the kind of machines quality that would come out will give us some headway to enter a corporate sector in a very big way in the next 2-3 years' time. I think that's how the numbers are going to go up.
So Abhishek has done some quick calculations. He's saying if 4 crore is 40 crore, 4 acre is 40 crore, is 45 acre 450 crore.
Yes.
But it's not for sale.
It's not, mathematics is right.
But it's not for sale. The whole idea is that one is it gives us a very, very strong asset base to get whatever facilities we want to expand the business, which is doesn't require cash, but it requires other facilities. The second is I mentioned that any surplus land in future, apart from the disposal of this 4 crores, we are looking to try and ensure that we get some continuous revenue out of that land. So if we are able, if now, if for example, they are talking about converting Surat into a very, very important economic center for India, and a kind of a smart city. Now, if that happens, a lot of the IT industry, which is only focusing on, say, Bangalore, Pune, Hyderabad, I think some of them will look at opening centers even in Surat. Now, if that happens, then we are in a very good position to capitalize on some of the surplus land that we have for development purposes or IT development or IT development centers. And if we can do that, then we have a source of continuous revenue from those developments.
And just one follow-up question. Abhishek is asking, do we have land in other places apart from Surat?
No, we don't have.
Okay.
Unfortunately, not.
Okay.
Only in Thana, but Thana is a very small
Land we have, where we make motors. That's a small, and of course we have in Canada.
Okay. Now coming to a totally different aspect, people are asking about green hydrogen. We have mentioned, that we might be entering that space. So are there any plans already made? What are the timelines? What exactly we are planning to do there?
Yeah. So, as a policy, we have decided that we should get into this business of green hydrogen. So we have hired the people in from relevant experience and knowledge in that business. And right now, we are in an exploratory mode. We are considering as an investment and looking forward for some business coming in 25-26. Basically, as a EPC contractor, on-site hydrogen business manufacturing, we are tied up with one or two good Chinese electrolyzer units. We are talking to L&T for some MOU to back them up on certain balance of plant kind of a business. We are talking to Tata Projects for having some kind of a tie-up for this business. So a lot of interesting and exciting things are happening on the hydrogen business. But of course, it is going to take time because we have just started the journey. We have just taken the first step. And I'm sure by the time end of this year, we'll have a much more clarity and where we have to go from here, this point of time. And I'm sure next year some business will start flowing in for whatever spade work we are doing in the current year.
Got it, sir. One of the questions, I had was, you mentioned about possibility of inorganic, growth also, and some money is earmarked for that. So what kind of assets are actually we're looking at? And, what would be the kind of, return ratios that we're expecting when we look at any kind of acquisition?
Well, we are basically looking at anything which is related to our current business. So it would be either in the area of machine tools, it could be in the area of air engineering, it could be in the area of pollution control. So these are the areas that we are looking at for possible acquisition.
Okay. And any return requirements in our ratio that like the payback should be like 2 year, 3 year, or?
I think it all depends on what kind of. I think it's too early to say that, but obviously, when we do an acquisition, we'll be ensuring that the payback periods are reasonable.
Okay. One of the questions that a lot of people have asked is that once this merger is through and we are doing all this capex, etc., what would be the numbers look like in terms of top line, EBITDA margin, in say 2 years' time? Where are we headed?
I've already explained. I think I think to say more than that would be too forward. Would be making very forward statements.
Yeah, that is true. So, I mean, you mentioned that we should be expecting 12 to 15% revenue growth and margin improvement.
That's
Plus
right.
whatever comes.
Right.
And B also you have mentioned it's 150 crore top line and 5% PAT margin at the moment. So people can
Which should
do
improve.
some
That
of the
definitely
calculations. One person has asked what will the total number of shares post the merger? That's around 4.75 crore. I've already mentioned.
Okay.
So coming back a little bit, meaning what about our distribution network? We have a very strong distribution network. Um, how are we planning to, monetize that? Obviously, we have capex coming up. Are there any new product categories which we can introduce in India, given that things are changing?
The point is it has to be in related business. It cannot be in any unrelated business.
Mhm.
So that I think Sanjeev has already explained what we are doing in in the aspect of machine tool. Similarly, in air engineering, what we are doing in terms of diversifying, so that we can cater to the air engineering requirements for other types of industries other than textile.
Mhm. Very good. So one question, I mean, Abhishek and Jinesh are obsessed with the land that we have.
No,
So
but
they,
I think we made a mistake. The Khana land does not belong to Batliboi. It belongs to one of those companies that we had talked about. So
right.
if you look at the value, we can. I mean, if 4 crores can get if 4 acres can get 40 crores, 45 acres, you can imagine, you can calculate yourself, and obviously, land also the value of land also depends on what parcels you look at, whether it is all road facing, not road facing. Are you going to look at the entire 45 crores as one parcel, which obviously we are not.
Got it. So there's
But I think the valuation, I think you can make it out for yourself.
and Canada, sir,
It's much more than what our book value is. That's all I can say.
and the land in Canada that you mentioned, is it monetizable or anything, any value?
What we are trying to do is to ensure that we can expand our manufacturing facilities in the same land. That is where we require a lot of regulatory approvals in Canada because of their very tough urban laws and environmental laws.
So Bhavik is asking whether Batliboi Renewable Energy and Spartan Electricals are they part of our listed entity?
No. They are companies owned by the promoters, but
Got it. Right, sir. So I think anybody has any further questions can actually raise, in the chat box. So overall, sir, Acharya, we have got Dhaval who's asking, are there any strategic partnerships with any other MNC companies we are looking at?
this is a continuous process.
If very exciting opportunity comes through, we may look at it.
This is a continuous process in our business that we're always looking at partnerships, working arrangements, and also people are looking at us also because thanks to the new India, that everybody thinks that India is a place to be there and to have, and a lot of companies globally in the capital goods industry are not necessarily multinational corporations. So they don't have the wherewithal to set up their own ventures in India. So they are looking at partners also in India.
Got it. Net Netik is asking that we are talking about 20 crore capex and 80 crore top line, which is a 4x asset turn, which looks a little bit high. Uh, so is it because of the infrastructure is already there, or?
That's right, because infrastructure is already there. What we are adding is equipment which will increase the productivity of the critical components that we manufacture.
Got it. So I think this was a very entertaining and good discussion we had, and we have been able to understand the drivers of the business. Any closing comments, so you would like to make before we give it a close?
Only thing is that we value the fact that all of you are here that you've spent this afternoon talking to us and listening to us, and we very much appreciate that.
One question actually I missed. Mahesh asked, there are some related party loans. I'm hoping it will be gone with all the fundraise.
Yeah, the related party loans, don't worry, most of them are non-interest bearing.
Okay, very good. So thank you so much, sir. Thank
And
you.
I must say that in spite of the fact that 70+% of the equity is held by the promoters, there are only two family members of the promoters in the business, that is myself and my son. And we have a highly professional management, which will continue to remain professional. And I think with the way technology is moving, with the way things are developing in the world, I think it's good for promoters to have excellent technocrats working for the company.
Excellent, sir. Thank you so much. Thank you for your time.
And also, we have a very independent board, and the board is very, very demanding on the management.
That's good to hear, sir. Always safeguards are necessary. So thank you so much.
Their job is to safeguard the interests of the minority. And if they safeguard the interests of the minorities, the majority is also protected.
That is true. That is always true. So thank you so much. I'll just stop the recording here.
Okay,
And
thank you all. Thank you once again, and thank you, Rakesh, for organizing.